Hi, Chris again, your real estate broker here at Get Listed Realty. In this video, I'm going to get into everything you ever wanted to know about the mortgage contingency. But first, congratulations are in order. You have found a buyer for your home, entered into a contract with them, and are now in the escrow process. Depending on the terms of your contract, you may have a couple of contingencies that need to be removed before you can get your house actually sold. And perhaps one of the most complicated and important contingencies of them all is the mortgage contingency. In essence, the mortgage contingency is in place and states that the buyers will secure what's called mortgage commitment by the date specified in the contract. And if they do not get this mortgage commitment, the contract can be canceled and the deposit returned to the buyers, which means you have to put your house back on the market. This is a huge way out of the contract for the buyer, which means it can be particularly problematic for a seller because it can take many weeks to find out if your buyers will actually get this mortgage commitment or just end up getting denied and be unable to purchase your home. And if you have to put your house back on the market after all of that, then you are right back to square one, except a few weeks to months further down the road. This is not a good situation to be in. So hopefully, before you accepted the buyer's offer and entered into a legally binding contract, they provided a pre-approval letter from the bank that states that they met some basic qualifications for obtaining a mortgage. In case you were wondering, the buyers can only provide a pre-approval letter when submitting an offer to buy your home. I've never seen or heard of a buyer being fully approved for a mortgage at the time they submit the offer. This is because the bank will want them to go through the full underwriting process. So what is the mortgage underwriting process? This is where an actual live person, not a computer, carefully and diligently reviews the complete mortgage application the buyer submitted to determine what the probability is of the borrowers defaulting on the mortgage loan. This is also called determining the risk level. The underwriter's job is to determine if this risk level is acceptable for the lender's standards and to make sure that the property meets the full lender's qualifications. It is important to note that every lender has different criteria that they use to determine what an acceptable level of risk is and what property qualifications they will accept. Now, there are a lot of steps in the mortgage underwriting process. One of the most important steps that typically happens during underwriting is the appraisal of the property. This is where a licensed real estate appraiser will come to your home and determine what it is worth in today's market. It is very critical to understand that if your home does not appraise at or above the purchase price in the contract, then the lender can deny the mortgage loan to the buyer. This all depends on the type of financing and down payment amount the buyers are doing for the loan. If this low appraisal scenario does happen and the bank will not finance the loan, you have three options. Number one, you have the right to cancel the contract and put your home back up for sale. Number two, you can renegotiate the purchase price or other terms of the contract with the buyer. Number three, you can dispute the appraisal and try and get it adjusted. Hopefully this will not happen to you, but it does happen. Once the loan has fully gone through the underwriting process and looks good, this is where that mortgage commitment letter is issued to the buyers. Okay, so you must be asking, what exactly is mortgage commitment? Mortgage commitment is when the bank basically says, okay, our underwriters completely reviewed the application the buyer submitted, as well as the property, and they approved them for getting a mortgage to buy your home. And they communicate this with a formal written letter of commitment to the buyers. When this commitment letter is sent to the buyers, they should then send it to you for verification. Then, the mortgage contingency in your contract should be satisfied, and that's good news. Great news, actually. But you are not out of the woods yet. Usually this letter will include some terms and conditions that still need to be satisfied before they are 100% approved. But this is a huge milestone. The buyers at this point should be able to get the loan to buy your house. And typically, they will only get denied after this letter is issued if something is completely out of whack. So what are some example conditions that could be in the mortgage commitment letter? Here are some of the most common. Verification the buyers have the required funds to close. Verification of employment closer to the closing date. Verification that the buyer's debt-to-income ratio has not significantly increased. Verification of a homeowner's insurance policy in place. Verification of satisfactory title commitment. The above list are some of the most typical examples. However, it is important to note that the lender could put any conditions that they feel like into this letter, and they will need to be satisfied in order to get the clear to close. But before I talk about the clear to close, I want to give you some friendly advice. If mortgage commitment has not happened by the date in the contract, then the buyers and sellers can work together to hopefully extend the date. But you only want to extend this date if the buyers have been working diligently on securing a mortgage and both parties are in agreement that an extension is what they both want. After all, if it looks like the buyers will eventually just be denied for a mortgage, it might make sense just to go your separate ways and not delay the inevitable. But back to clear to close. Remember talking about the conditions in the mortgage commitment letter? Well, when those conditions are met and the lender is satisfied, then they will typically issue what is referred to as the clear to close. And at this point, the closing has the green light to happen from a mortgage perspective. There is no definite day or timeline as to when clear to close happens, but ideally you want it to happen with plenty of lead time to get everything scheduled correctly. This is really out of your control as a seller, but you should stay on top of the buyers and agents to make sure everyone is working hard to get the clear to close. The biggest takeaway is that if you accept a buyer who is relying on a mortgage to purchase your home, then you always run the risk of the deal falling apart due to the mortgage getting denied, which means you are not safe until you get to the closing date. Hopefully, this did a good job walking you through the mortgage contingency when selling your home. This is a complicated topic, and I wanted to make sure that you are as educated as possible when selling your home on your own DIY style. But if not, and you still have more questions, please contact me directly through my website to discuss how I can help you out.